Welcome to the Thomson Reuters Idea of the Week and Alpha Now. I'm John Cozy. Here's an attention grabber for you. Over the last 5 years, owning stock in Warren Buffett's Berkshire Hathaway has been less profitable than buying into the public companies it holds. Those firms include Coca-Cola and Wells Fargo. This DataStream chart shows that if you'd invested $100 in Berkshire Hathaway stock in red 20 years ago, you'd have almost $1,400 today, compared to $450 for the S&P in black. Over the past 5 years, Berkshire and the S&P are about even. Berkshire fell less than the S&P in the financial crisis and rose more in 2010 on the excitement over the Burlington Northern acquisition. But it's returned just about the same 8% as the S&P. Now let's add Berkshire's top 20 public stock bets in yellow. They're up 5 times more at plus 40% over the same period. So what's driving that kind of return? This attribution analysis using StarMine shows big bets in 2 sectors, the more conservative consumer staples sector and the more aggressive financials. Consumer staples names include Coca-Cola, Procter & Gamble, and Kraft Foods. Financial sector holdings include Wells Fargo, American Express, U.S. Bancorp, M&T Bank, and the Bank of New York Mellon, all standing to gain in an economic recovery. So, are Berkshire shares poised for a rebound after this lackluster 5-year time span? StarMine shows that based on Wall Street earnings projections, Berkshire's 11.2% forecast, compounded over the next 5 years, beats the 8% projection for Buffett's top 20 holdings. Current market prices, though, imply Berkshire should grow by 10.8%, pretty close to Wall Street forecasts. So this general agreement means Berkshire shares could be fairly priced. And here's where things get interesting for investors. Current prices for Buffett's top 20 portfolio imply only 4.1% growth. That difference from the higher analyst forecast opens the door for a potential bargain. So if the analysts are right, then the top 20 portfolio may be a better bet at a lower current valuation. For cautiously optimistic investors, combining Buffett's big bet of consumer staples with financials may be just the right strategy compared to owning Berkshire stock itself. For the Thomson Reuters Idea of the Week and Alpha Now, I'm John Cozy.